In recent weeks, the North American auto industry has found itself at the epicenter of a major political and economic storm. What was once one of the most deeply integrated manufacturing sectors in the world, defined by decades of close US-Canada cooperation, now stands divided by a 25% tariff wall. Canada has struck back against the Trump administration's aggressive protectionist policies, imposing steep tariffs on US automobile exports. The fallout is massive, threatening key players like Tesla, Ford, and General Motors with billions in potential losses. But this isn't just about cars. This could reshape the very future of North American trade. Today, we unpack how this all started, who stands to lose the most, and what the road ahead might look like. To understand just how seismic this shift is, we need to rewind the clock. For decades, the US and Canada shared one of the most seamless automotive supply chains in the world. It wasn't just about exporting finished vehicles. It was about a vast, interconnected production ecosystem. A car engine built in Ontario might cross into Michigan for assembly, only to return to Canada for final inspections or modifications. Parts, labor, and expertise flowed freely across the border. In many ways, Detroit and Toronto operated like twin cities of the automotive world. But all that is now at risk. The current crisis was triggered by a new wave of tariffs announced by the Trump administration. Citing national security and economic sovereignty, the US imposed additional tariffs on Canadian-made auto parts and vehicles, part of a broader protectionist strategy that's been escalating over the past few years. Ottawa's response was swift and sharp. Prime Minister Mark Carney, speaking to Parliament, declared, "Enough is enough." He went on to say that Canada would no longer tolerate unilateral economic attacks by its closest neighbor. The move had wide support at home, with recent polls indicating that over 65% of Canadians back the tougher stance. For Carney, this wasn't just about economics. It was about national dignity. The impact on the auto industry has been immediate and painful. Tesla, already suffering from weakened demand in Canada after federal incentives were scrapped, now faces a new 25% tariff on vehicles shipped north of the border. That translates to thousands of dollars in added costs per vehicle, making Tesla even less competitive in a market it once considered strategic. Analysts estimate the company could lose up to $500 million in Canadian sales alone. But the pain doesn't end with Tesla. Ford and General Motors are even more exposed. Both have significant manufacturing operations and supply dependencies in Canada. Their cross-border logistics are finely tuned, and any disruption, especially one as costly as a 25% tariff, throws the entire system into chaos. For consumers, this means higher prices, an estimated $3,000 to $5,000 increase per vehicle. For the automakers, it means billions in potential revenue lost and major headaches as they scramble to reroute supply chains or absorb losses. Unsurprisingly, the financial markets have reacted with alarm. Following the tariff announcement, the stock prices of Tesla, Ford, and GM all took noticeable hits. Investors are nervous, and for good reason. Trade tensions introduce uncertainty, and uncertainty is poison for markets. Industry analysts have begun warning of a lose-lose spiral, where retaliatory measures on both sides drag down productivity, consumer demand, and investor confidence. But it's not just the automakers who are affected. Thousands of smaller suppliers, many of them family-run factories in border towns, are now caught in the crossfire. From aluminum parts to dashboard components, every cog in the supply chain is at risk. Canada, however, isn't just reacting, it's recalibrating. Prime Minister Carney has made it clear that Canada will not remain dependent on a single trading partner, no matter how large or historically important. Trade talks with Europe and Asia have intensified in recent months. Officials are exploring deals with South Korea, Japan, and the European Union to diversify export markets and secure more resilient partnerships. Carney's administration has framed this shift as both strategic and patriotic. We are strong, we are sovereign, and we will not be held hostage by political games in Washington. Back in the United States, the mood is increasingly uneasy. Behind closed doors, reports suggest panic is spreading in both political and corporate circles. Trump's inner circle, including advisors linked to the auto sector, are reportedly shocked by the strength and speed of Canada's retaliation. And then there's Elon Musk, whose company is now facing even steeper uphill battles in the North American market. Rumors have surfaced that both Trump and Musk are scrambling for a back-channel solution, fearing not only economic fallout, but also the political consequences of rising prices, shrinking exports, and investor backlash. What comes next is anyone's guess. Will Washington double down on its tariff strategy, risking a full-scale trade war? Or will cooler heads prevail, leading to a negotiated rollback and restoration of economic harmony? The problem is that the trust once foundational to US-Canada trade relations has already been fractured. Even if an agreement is reached, it may take years to rebuild the predictability and cooperation that once defined cross-border commerce. More broadly, there's a growing concern that this dispute could permanently rupture the North American auto ecosystem. If US brands become too expensive or unreliable for Canadian consumers, they may simply turn elsewhere. European and Asian carmakers, already strong in Canada, could fill the gap, eating into American market share, and potentially establishing new long-term supply chains that exclude US partners altogether. That's not just a short-term headache, it's a generational shift. And then there's the bigger picture. This is not just about cars. It's about what kind of economic future North America wants. Are we moving toward a fragmented, nationalistic model where each country goes it alone? Or can we return to a system of mutual benefit, where cooperation and integration create shared prosperity? For now, the answers are murky, but what's clear is this: the road ahead is uncertain, and the stakes couldn't be higher.